The Bank of Canada will deliver its next interest rate decision tomorrow, and many market watchers expect a second consecutive cut in borrowing costs. BNN Bloomberg's Paul Bagnell is standing by in Toronto with more for us this morning. Bit of a preview, Paul. Should we be expecting some good news tomorrow?
If you consider good news to be a rate reduction, and I think a lot of Canadians would equate a rate reduction with good news, then I think, yes, it is reasonable to expect good news from the Bank of Canada at 9:45 a.m. Eastern Time tomorrow. That's when the Bank of Canada makes what is referred to as a policy announcement, and the expectations are now overwhelming that the bank will reduce its key overnight lending rate by 25 basis points in the terminology of economists and market watchers. That's more commonly described as a quarter point reduction in the rate. And that would take that overnight rate to 4.5%. It got as high as 5% when the bank was in rate increasing mode. And then what happens after the Bank of Canada does that is you can reliably expect within the next 24 hours, all of the major banks in Canada and most of the smaller financial institutions as well would reduce their prime lending rates. And that has a cascading effect on reducing the rates being charged on some, but not all, loans to their customers.
And for many, the timing is key. There's a new poll out that says 2/3 of Canadians say, Paul, they desperately need rates to go down.
That is probably, I'm guessing that poll is of people who have variable rate mortgages and need to renew those in the next year or two. And we've read a lot about Canadians feeling the squeeze there. Many Canadians with variable rate mortgages are paying many more hundreds of dollars or even thousands of dollars on their monthly mortgage payments because of the run up in interest rates. So it would be welcome news to many borrowers around Canada. Let me give you some background. The Wall Street Journal wrote today that last week it surveyed 14 Canadian economists on what they expect the Bank of Canada to do tomorrow. Every one of those 14 economists predicted that we will get a rate cut from the Bank of Canada. And there's a section of the Canadian fixed income market called the overnight index swaps market, and it serves as a predictor of what the Bank of Canada is going to do as well. And that market, as of this morning, is pricing in a 87% chance of a rate cut tomorrow. And we won't just get a policy announcement from the Bank of Canada. That comes by way of a press release that's about a page and a quarter long. But we'll also get a monetary policy report, which is a lengthy, about 30 pages long report on the state of the Canadian economy as seen by the Bank of Canada. And we'll get a news conference in which Tiff Macklem, the governor of the Bank of Canada, and Carolyn Rogers, the senior deputy governor, will speak to the news media. So lots of information coming from the Bank of Canada tomorrow.
Okay, and Paul, just quickly, could there be another rate cut by the end of 2024?
Yes. I can tell you as well, the Wall Street Journal survey believes that by the end of this year, 2024, the Bank of Canada rate will stand at 4.0%. So that implies 2 further cuts after the July cut, but nothing is certain. And the bank has said over and over again that its judgment on these things will be data dependent. It wants to look at the incoming data, and the data that makes it likely to cut rates tomorrow is inflation has softened significantly. We saw the June inflation numbers come in a couple of weeks ago, and they were weaker than expected, lower than expected, and people believe that the bank is now becoming more and more confident that inflation is on the path to 2.0%.
Paul Bagnell for us this morning. Paul, thanks for all that. Good to see you.